All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Friday, everybody. Today is August 15th, 2025. Man, that week went fast, didn't it? The top story this morning. What the hell? Intel. Okay, so we got to set the table for this one. Remember, it was 3 days ago, we were talking on the morning live stream about how President Trump was demanding the resignation of Intel CEO Lip-Bu Tan because he used to be the CEO of this company called Cadence. And while he was the CEO of Cadence, Cadence made all these deals with Chinese military colleges. They were simulating nuclear explosions, helping the Chinese military. And then they were like, if Intel is such a vitally important company, maybe a guy who does that kind of business with the Chinese probably shouldn't be in charge. So President Trump is demanding Lip-Bu Tan step down. There was a meeting between President Trump and Intel CEO Lip-Bu Tan. And I don't know what happened at that meeting, but all of a sudden yesterday, the story breaks that the federal government, instead of forcing Lip-Bu Tan to resign, they're probably going to buy a whole bunch of Lip-Bu Tan's stock instead. Man, to be a fly on the wall at that meeting. The government is considering taking a stake in Intel. Now, my friend Joe Brown from Heresy Financial pointed out on Twitter yesterday, don't we have a term for that when the government owns the means of production? Oh, that's right, communism. Yeah, about that. And second of all, what the hell happened? Why in 3 days we went from the CEO's terrible, he's a Chinese double agent, we got to get rid of him, to I love this guy, he's great, let's buy a stake in his company. Lip-Bu Tan must have bought a lot of DJT tokens at that meeting or something. I don't know. Maybe he gave one of those gold bricks with a little piece of glass on it, like Tim Cook gave from Apple. That totally not a bribe that managed to buy his company exemptions from tariffs. Look, whatever the hell happened at that meeting, the government is continuing getting into chips. So we've got government chips. All right, that's on the horizon here. Now, keep in mind, guys, this follows several recent developments, such as the U.S. government took a stake in U.S. Steel as a condition of allowing Japanese company Nippon to come in and merge with U.S. Steel. Also, the government took the Department of Defense took a 15% stake in MP Materials recently. Government magnets, remember that story? So what the heck? Government getting into all these businesses, owning stock in all these companies. Look, we all know what's going on here. This is all about national security. Look at the industries. Chips, vital to defense, vital to the economy. Steel, vital to building things like ships, which we would need to take on the Chinese in the South Pacific. And of course, chips, everything that goes boom in the U.S. arsenal has some amount of semiconductors in it. Guys, what's happening here, what's not being said, and I think people need to realize this, we are slowly being transitioned to a wartime economy. That's what's happening. I mean, this is the kind of stuff the government used to do in the middle of World War II. This is not the kind of thing the government does during times of peace and prosperity and unicorns and rainbows. And, look, I get a lot of flack on this channel because I tend to be on the negative side. Yeah, all right. I wear that on my sleeve. Perma bear. I accept that. I resemble that. But this should worry people, all right, that we're transitioning to a wartime economy when we are supposedly not at war. I know if you look at cybersecurity and how we're hacked on a daily basis, it kind of looks like we're at war, but we're not shooting at each other yet. I mean, the Chinese are ramming their own ships while they're trying to mess with the Filipinos and all these things that are happening in Scarborough Shoal this week. There's still time to switch it off, I guess is what I'm saying. There's still time to stop it. And by the way, if the government is taking stakes in our chip manufacturers and our steel makers and our rare earth materials, maybe then we should stop selling advanced semiconductors to our enemies, which, let's be honest, the Chinese are not our friends here, guys. We're not at war, but these are not our friends. All right. These people would happily stab us in the back if we ever turned on them, if we ever turned around. So maybe you want to stop selling advanced AI chips to our enemies so they can program their drones and missiles to target our carriers. If we're transitioning to a wartime economy, does that 15% export tax suddenly make all these concerns vanish and go up in smoke? No, they don't. Or as my moderator Mish pointed out this morning, maybe the reason we're still selling these chips to the Chinese is because there's kill switches or spyware preloaded in them. The Chinese certainly think so. Articles yesterday about how DeepSeek was pretty much ordered by the government to stop using Nvidia's chips, which they were never supposed to have in the first place. People kind of lost sight of that fact. Oh boy, WTF is going on in the world. And look, as we talk about this, kind of like backwards transition into a wartime economy, we have this high stakes meeting is going on in Alaska pretty much as we speak. It's supposed to start at 11:30, I think. President Trump and his delegation, which includes the vice president, the secretary of state, all these other guys, they're getting together with Vladimir Putin and his delegation in Alaska to try to set us on some kind of path to be cautiously optimistic about hopefully having a framework someday maybe to end the war in Ukraine. Let's hope we get a good meeting. Could we get a good meeting today, guys? Maybe we don't let our egos result in the deaths of hundreds of thousands of people. If you guys could go ahead and have a good meeting, we'd sure appreciate not being fed into the meat grinder by the hundreds of thousands. But, you guys do whatever you want. Like, you be volatile egomaniacs, with armies and your fingers on buttons. Please, don't let the fact that we don't want to be slaughtered get in the way of your ego this morning. Oh, let's just think happy thoughts about what's going on in Alaska. Maybe it's going to be good. Maybe the best we can hope for is a second meeting. I think, let's be realistic. Let's hope for not World War III, and let's hope for a second meeting on the schedule. That's pretty much as high as my expectations are. Also going on this morning, we got interesting story over at United Health, one of the world's most wicked companies, in my opinion. Their stock is surging this morning after Warren Buffett's Berkshire Hathaway announced they took a big position in United Health in the last quarter, according to their 13Fs. Also, David Tepper, he's the billionaire behind Appaloosa. He also took out a stake in United Health, as did Michael Burry of Big Short fame. All three of those funds bought stakes in UNH. So that stock is ripping this morning. People seem to be betting that the many scandals and DOJ probes and lawsuits and the whole CEO murder thing, that all that is behind them. And I guess they're saying UNH is heading higher from here. Some also important things. Buffett's Berkshire Hathaway also bought a stake in home builder Lennar. They bought a stake in Pool Corp. They sell maintenance and chemicals for swimming pools. They bought a stake in Nucor. There's another steel maker. Basically, guys, they're buying stakes in real economy companies, no tech Ponzi schemes or crypto anythings, buying actual companies that make physical products or perform physical services. That's kind of interesting. Also worth pointing out that if you take up all of these positions, all of these buys that Berkshire Hathaway made, it adds up to about half as much as they sold in Apple alone. So Berkshire is still ultra conservative, ultra bearishly positioned. They are sitting on a $344 billion pile of cash that continues to grow. We also got earnings this morning from Applied Materials. They posted an earnings beat and a revenue beat. They were pretty good numbers from Applied Materials. They make tools to make semiconductors, but it was the revenue forecast came in a little light. That's got people worried. The company is basically saying that tariffs and export controls are taking a chunk out of their business. And the CEO made an odd comment about customers digesting prior purchases. That's an interesting phrase to suggest maybe the top might be in for semiconductor fabs. I don't know, or at least maybe there's a lull before the next wave out there. Either way, that stock is selling off big this morning. We've got CoreWeave's lockup has officially expired. 80% of the outstanding shares of CoreWeave are now available to be sold by executives in Magnetar Capital and company. Look, that company is down 40% in just the last 2 days before the lockup. It's down again this morning ahead of the opening bell. Don't really know where this one is going to go, but I can tell you at least one company executive is already lining up to sell a lot of shares according to SEC filings. But never underestimate these guys. I'm telling you, they are so sleazy and they have very sharp pencils. Magnetar Capital and these guys at CoreWeave, they are skilled financial engineers. Never put it past them to pull something off that sends this stock higher. Who knows? But we all know where this one is going long-term, $0.00. We've got Rivian's got $100 million hole in their balance sheet created by a subtle change in the one big beautiful bill. That could be big problems for makers of electric vehicles. It probably applies to Tesla and others as well. And we got a story in the Wall Street Journal today about Americans' mobility is stalling. Long story short, outside of data centers and crypto Ponzi schemes, the economy just flat out sucks. And you can see it in the fact that people are pretty much just stuck in a rut, stuck where they're at. Guys, we got a lot to talk about this morning. How's about we shrink my big melon of a head? Let's see what's going on in the world of finance. Don't forget that like button and that subscribe button for the algorithm if you're new here, so you can come on back tomorrow and have your coffee with the melon heads, because we do this every single day. Right now, the S&P 500 is just barely positive, 6 points to the upside, 0.1% higher in lieu of absolute disaster. Number go up. The Dow is higher, actually kind of sharply higher, 262 points or 0.59% to the upside. This big move in the Dow is being driven entirely by United Healthcare. That is the biggest component of the Dow. That stock is up big this morning. We'll show that chart in just a minute. That's why the Dow is up so much more than the other indices. And the NASDAQ is actually in the red here, off by 27 points or 0.11%, possibly Applied Materials taking a chunk out of the NASDAQ this morning. Looking over at the U.S. dollar index, we've got the Dixie is down again, 35 basis points lower at 97.87. You know, guys, we were talking yesterday about how that PPI kind of raised red flags, questions about what consumer price inflation might do in subsequent months. The market started to adjust expectations for Fed rate cuts in September. The dollar started to strengthen on that news, and that's all gone now. That faded from memory real fast. We are back to my rate cuts, my dovish Fed, weaker dollar, and number go up this morning. Looking over at the bond market, we've got kind of a mixed bag once again here. The 30-year Treasury is at 4.890. That's higher by almost 1 point. The 10-year is up by just 1/10 of a point at 4.294. The 2-year is down by 2 basis points at 3.719. And the 1 month is at 4.360. That is higher by 4 basis points. Interesting to see that move in the 1 month. I wonder if that's a misprint, or are people starting to have second thoughts about the rate cuts? I thought that was going away based on the CME Fed Watch tool, but hey, that's interesting to see that big move in the 1 month, higher by 4 points and change. Also, guys, something to keep an eye out in the bond market, something we haven't talked about in a while. My friend Keenan sent me this message on Patreon yesterday. He watches the reverse repo very closely. Down to just 28.8 billion yesterday. Let's zoom in on this chart. Look at, like, say, the last 1 year. You may notice, guys, we are down to almost nothing on the reverse repo. That excess cash in the system is now nearly exhausted. It's taken us a while to get here. I don't know what has triggered this drawdown. It does look like it started right around the 4th of July, which was the passage of the One Big Beautiful Bill. And we started to see more bond issuance from the Treasury as soon as the debt ceiling was raised as part of the One Big Beautiful Bill. I hate saying that. So possible that increase in issuance of T-bills is causing a drawdown here in the reverse repo. And a lot of people are saying we're going to have a liquidity crisis when this gets to zero. I'm not sure it happens like on the mark when this gets to zero. For years, guys, there was no reverse repo, and the market functioned just fine. So maybe it's not like an instant crisis, but it does show that we are swinging from a period of excess liquidity in the bond market to a period of tight liquidity in the bond market. And that may be one more reason why the Fed is likely to start cutting soon. Also, let's look at commodities. We've got gold is a little bit higher this morning, $3,339. That's higher by $4 or 0.12% to the upside. Gold had a rough day yesterday, as did my favorite of the shiny, silver. Spot silver this morning is at $37.80, below $38, down 21 cents or about 0.57% lower. But I still like the shiny. I like that silver. Actually, I had a couple of constitutional 90% silver showed up at my place recently. Had a nice delivery. Be adding that to the stack. During good times, I stack silver. During bad times, I stack silver. So I don't really get so hung up on the day-to-day price movement. I still think silver is a coiled spring and that it is heading sharply higher in the medium term. We've got copper is higher a little bit here by 0.2%. Platinum is down by 1.2%. Palladium is also down almost 2.5%, and crude oil is off by 1.4% as well, $63.06 for WTI crude. September futures. Watch oil prices today, guys. If we see a sudden spike or a sudden drop in oil prices, it may have something to do with that summit in Alaska. Keep an eye on that one. Also, we have got Bitcoin has finally stabilized somewhat around $118,530 as priced on Coinbase, down sharply from the high we saw last night. We went as high as, or 2 nights ago, we went as high as 124,000 and change. Then we got that higher than expected PPI print, market adjusting Fed rate cut expectations. Bitcoin sold off hard. It was made worse yesterday by the news. Secretary Bessent from the Treasury came out and said the U.S. government is not going to be buying Bitcoin for the strategic Bitcoin reserve. Basically, we're just going to be holding the Bitcoin that the government has confiscated from criminals and things like that. People were like surprised by that. I don't really get the surprise, to be honest with you. Our government is running a $2 trillion annual deficit, and people were out there thinking the government was going to borrow money to buy Bitcoin. The federal government is not a Bitcoin treasury company. So I wasn't at all surprised by Bessent saying we're not going to be buying Bitcoin. I think it would have been stupid for the government to buy Bitcoin. But people were pretending to be surprised. Maybe that added to some of the bearish sentiment in Bitcoin yesterday, but that seems to have run its course. We've now stabilized around 118,000, pretty much where we've been for the last couple of weeks. All right, now here's the big one this morning. Trump administration said to discuss taking a stake in Intel, and there in the picture is Lip-Bu-Tan. And by the way, did anybody else notice that Lip-Bu-Tan looks an awful lot like a Malaysian Jerome Powell? Am I the only one who sees that? That is the same, like, not smile through the glasses with the squint that Jerome Powell does every time. I swear every time I look at this, I see Asian J-Powell. But I digress. Let's talk about what's going on in Intel here. The Trump administration is in talks with Intel to have the U.S. government take a stake in the beleaguered chip maker, according to people familiar with the plan, and the latest sign of the White House's willingness to blur the lines between state and industry. And again, guys, beware that blurring line between state and industry. That is a giant step in the direction of communism. You know, look, if I wanted nationalization of companies, I would have voted for that cackling buffoon from California. This is definitely not what I voted for. I get why they're doing it. It doesn't mean I like it. A deal would help shore up Intel's planned factory hub in Ohio, said the people who asked not to be identified because the deliberations are private. The company had once promised to turn that site into the world's largest chip-making facility, though it's been repeatedly delayed. The size of the potential stake isn't clear. Well, I thought we already gave Intel money for that factory. Didn't we give Intel billions of dollars from the CHIPS Act to build this factory in Ohio, and they never built the factory, and now that we're going to give them billions more in exchange for stock to build the same factory? Is Intel just going to keep promising this factory for years and years, and we're just going to keep giving them billions and billions of dollars over and over again for a factory that never gets built? This is like the high-speed rail in California. It's just a perpetual project that never ends, but just constantly costs us money. A little bit of a rant there. Sorry, guys. The talks come just a week after President Trump called for the ouster of Intel CEO Lip-Bu-Tan, accusing him of being highly conflicted because of concerns about his earlier ties to China. The plan stemmed from a meeting this week between Trump and Tan, the people said. While the details are still being sorted, the idea is for the U.S. government to pay for the stake, one of the people said. Another caution that the plans remain fluid and the talks could still end without an agreement. It's the latest direct intervention by Trump into a key industry. The administration reached an agreement to receive a 15% cut of certain semiconductor sales to China and took a so-called golden share in the United States Steel Corp as part of a deal to clear its sale to a Japanese rival. The Intel idea also echoes the Defense Department's unprecedented announcement last month that it will take a $400 million preferred equity stake in the little-known U.S. rare earth producer MP Materials Corp., a deal that would make the Pentagon the company's largest shareholder. That move turned conventional wisdom on its head among investors, analysts, industry executives, and even longtime government officials in terms of how private industry has dealt with the government. These home run investment swings by the federal government also aren't expected to be one-time deals. Bloomberg News has previously reported with Trump and his administration adamant about boosting domestic champions in sectors deemed critical to combating China on national security grounds. And by the way, if the government is going to start taking a stake in companies that are vital to national security and taking on China, then it's only a matter of time before the government announces they're taking an ownership stake in some shipbuilding outfit somewhere or a shipyard. That's That's the next logical step in this pattern. In the past few months, we've seen the government take a much more active role in engaging the economy, a much more sort of hands-on industrial policy, said Jeffrey Gertz, senior fellow at the Center for New American Security. That appears to be the current direction for U.S. industrial policy in these critical sectors, he told Bloomberg. Again, guys, this is a slow, quiet transition to a wartime economy. Shares of Intel this morning. Oh, by the way, one other thing before we look at that. Shout out to the Kobayashi letter who pointed this one out. This is unusual. At 3:41 p.m. Eastern time yesterday, someone bought 1,500 contracts of Intel calls expiring tomorrow or today for 5 cents each. At 3:43 p.m., news emerged that the Trump administration was considering a deal with Intel. The stock is now trading 10% higher on the news. Those same calls are set to open tomorrow 1,000% higher. Did somebody know? Now, he started this whole tweet with, "This is unusual," that 2 minutes before the story broke, somebody took out a massive position, a massive levered bet in Intel. But let's be honest, folks, this is not unusual. As a matter of fact, this has become so usual that you're probably sitting there saying to yourself right now, oh, this happens all the time. We know the congressmen and the government that they all do this. No, it's not supposed to work that way. This is usual. It shouldn't be that way. This is illegal. The same set of laws should apply. We should find out who did this, and we should send their asses to jail because somebody was insider trading on the news of our government picking and choosing winners and losers in the economy. There's so much to not like in this story here, guys. So much to not like. But you know what? Intel stock higher by 4.5% after rising 7.3% yesterday. Shares are trading at $24.90, up another buck ahead of the opening bell after rising $1.50 yesterday. This one is ripping. All right, we've also got Buffett's stock buys say plenty about the stock market and why his inaction says more. A lot of people were raving about Warren Buffett's 13 Fs yesterday. It's also worth pointing out that Warren Buffett is not actually the CEO anymore. He just kind of is the figurehead. He goes into the office every day, but he's not in charge. Kind of sucks for the guy who actually is in charge. But sometimes what you don't do speaks louder than what you do. With a net worth of about $140 billion, there's a reason Warren Buffett is considered the ultimate investing guru by so many. As he prepares to step away from his CEO role at Berkshire Hathaway by the end of the year, his followers are running out of time to imitate his move. And the latest Berkshire trades reveal the house is still on the lookout for cheap shares. It bought a stake in United Health, the insurer that has dropped over 50% over the past 12 months, probably because it sees the sell-off as overdone. And for what it's worth, David Tepper's Appaloosa also bought UNH stock in the second quarter. So did Michael Burry, the investor who famously made billions in the 2008-2009 financial crisis, as dramatized in the movie The Big Short. Given the stock's continued declines before Friday, they may have all lost money so far. Buffett also snapped up beaten down house-building shares, including Lennar and D.R. Horton. He leaned into a tariff trade, which purchases steelmaker Nucor, which is a bet in part that taxes on imports will bolster U.S. producers. But the biggest takeaway is how little Buffett's firm bought. Its purchases totaled less than $2 billion, yet it sold more than $4 billion in Apple shares alone. Even the investments the company did make were so small they might have been directed by Buffett's lieutenants rather than the Oracle of Omaha himself. We all know Berkshire was sitting on a pile of $344 billion in cash at the end of last quarter. That's extraordinary, more than a third of the company's market value of $1 trillion. So despite these buys, Buffett and Berkshire remain very conservatively positioned, very bearish on the economy, but that is driving United Health stock sharply higher here, up almost 11% ahead of the opening bell this morning, $301.28 for UNH. But let's put that in perspective, guys. This is a stock that is down 53% over the last year, clawing some of that back this morning, but certainly not all of it. Now we've got Applied Materials stock tumbles after earnings. Tariff risks are weighing. Pay attention to this one. Possible insight into the AI mania here. Applied Materials gave a disappointing outlook late Thursday, driving its shares lower. It looks like bad news for the chip manufacturing tools sector as a whole. The chip equipment maker reported adjusted earnings of $248 a share for the July quarter compared with the consensus estimate for $236. So it's a nice earnings beat. Revenue came in at $7.3 billion. That was higher than analysts' expectations of $7.22 billion. So top and bottom line beat. But Applied Materials also forecast a range of revenue for the current quarter, which ends in October, with a midpoint of $6.7 billion below the consensus view of $7.33 billion. We are currently operating in a dynamic macroeconomic environment. We're currently operating in a dynamic macroeconomic and policy environment, which is creating increased uncertainty and lower visibility in the near term, including for our China business, Applied Materials CEO Gary Dickerson said in a press release. In an interview with Barron's after the results, Dickerson said some customers in China were digesting prior purchases and that getting export licenses for products have been backed up. So the tariffs, the trade war, the export controls taking a big chunk out of Applied Materials' Chinese revenues. And that comment about digesting purchases kind of suggests like maybe the buying has run its course, like there's no longer that much demand for Applied Materials semiconductor manufacturing tools. I mean, I don't know how else you interpret digesting prior purchases. He added that the company saw lumpiness in its pipelines as customers face uncertainty surrounding future trade and tariff policies. They found a lump. It's never good. Lumpiness. Yikes. Dickerson noted that any near-term issues don't affect Applied Materials' confidence in the company's long-term growth opportunities, including around artificial intelligence and robotics. Yeah, other than that lump, other than that cancerous growth and the digestion of prior purchases, there's nothing to suggest our bubble is going to stop inflating. Applied Materials stock taking it on the chin this morning. The opening bell has just rung, and Applied Material actually holding up all right here, down just that can't be right. There it is, down 13.6%, $25.61 lower, $162.76 for Applied Materials. And my favorite company in the whole wide world, CoreWeave IPO investors are sitting on big gains and get a chance to sell. The lockup expired at 4 p.m. yesterday, and now we find out who's selling. CoreWeave's March initial public offering has been a roaring success for anyone lucky enough to get in at the start. The stock more than quadrupled by mid-June. Even after a recent sell-off, the shares are still up by nearly 150%. The problem, though, is most of those early investors haven't been able to cash in. That changes Friday for holders of more than 80% of CoreWeave's Class A shares, with the IPO lockup expiring 2 days after its second earnings release as a public company. The stock has plunged 33% in those 2 days, in part, analysts say, in anticipation of a flood of selling. I don't know how much of that recent sell-off is anticipating the lockup as much as it was CoreWeave loses money and that their accounts receivable is growing faster than their revenue. Yet another accounting red flag at this company that's basically built on a foundation of accounting red flags. But we know some people are selling already. Shout out to my buddy Just Dario, who posted this one on X. This is an SEC filing for Jack Cogan. You may recall that name. Jack Cogan is the former boss of CoreWeave CEO Michael Intrater, along with one of his other co-founders. Remember, these guys all used to trade carbon credits through shell companies in the Cayman Islands, which is a totally not at all suspicious, indicative of fraud and money laundering and all kinds of other crooked things that happens through shell companies in the Cayman Islands. Yet Jack Hogan was the guy who was the CEO of NatSource, which is who CoreWeave CEO Michael Intrater used to work for. And well, Jack Hogan is now a director at CoreWeave. And as soon as the lockup expires, Jack Hogan goes ahead and files to sell 3 million shares of CoreWeave. That's worth about $300 million. It's also about 10% of his stake in the company. So, all you bros who piled into this company, who FOMO'd into CoreWeave shares, congratulations. You made Jack Hogan $300 million, along with Magnetar Capital, the sleaziest hedge fund in the history of the world. CoreWeave shares today, however, let's give a refresh, get an accurate mark, down another 1.38%. All things considered, CoreWeave shares are actually doing all right this morning. That is after falling nearly 40% in the last 2 days, trading at $97.88. That's down another $1.60 here. So far, the selling appears to be somewhat muted. Meanwhile, we've got this one. Rivian says it faces a $100 million hole after relaxation of fuel economy rules. Pay attention, you Tesla shareholders, anything having to do with EVs. If this is hurting Rivian, then it's hurting everybody else in the space. Electric truck maker Rivian says the rollback of fuel economy rules in the U.S. is holding up $100 million of revenue, a sign of how changes to automotive policy under the Trump administration are starting to hurt the electric vehicle industry. Rivian and its rivals have generated hundreds of millions of dollars in revenue selling credits tied to the nation's fuel economy rules. In other words, carbon credits, that imaginary commodity that was invented by the Greens in order to drive up your cost of living to get you to eat bugs and use less energy. But after the Trump administration removed penalty for violating those standards, the nation's top automotive regulator stopped issuing the paperwork necessary to finalize those credits, leaving EV makers in the lurch. Last week, the Zero Emissions Transportation Association and EV Trade Group filed a petition to the U.S. Court of Appeals in Washington, D.C., asking the court to intercede. The group wants to force the NHTSA to resume issuing the so-called compliance letters, certifications that show how much each automaker complies with or violates the nation's fuel economy rules. Zeta declined to comment. The dispute highlights a lesser-known part of the U.S. auto industry, the buying and selling of so-called regulatory credits. They're carbon credits. Why do we call them regulatory credits? I don't know. Revenue from these credits has been a reliable stream for EV makers and a hefty expense for legacy car makers whose fleets contain gas-guzzling pickups and SUVs. So what this paragraph is saying without actually saying it is if you have bought a car over the last few years and that car had an internal combustion engine, as most do, your car was more expensive because the people who sold it to you have to buy this fake commodity carbon credits and give it to companies like Rivian and Tesla who make electric vehicles. It's another way this EV industry has been propped up by subsidies and penalties and fake mandates. And of course, Rivian, who's already in trouble, they've got $100 million revenue hole now because of that. And I'm sure this is going to affect everybody else in the EV space as well. And last but not least, guys, we got to talk about this one. All right. We've talked about the bifurcation in the U.S. economy for years now on this channel. And this Wall Street Journal article this morning summarizes this pretty well. Every day we're talking about another crypto Ponzi scheme or another, accounting irregularity and AI names. It seems like the only thing our economy produces right now is accounting fraud and Ponzi schemes. Meanwhile, everybody's like, oh, my stock market, my number go up. But then look at headlines like this. Nobody's buying homes. Nobody's switching jobs. And America's mobility is stalling. That's right, folks. It's the best economy ever. The paralysis has left many people in houses that are too small, in jobs they don't love, or shackled with golden handcuffs. For everyone, there are economic consequences. Americans are stuck in place. People are moving to new homes and new cities at around the lowest rate on record. Companies have fewer roles for entry-level workers trying to launch their lives. Workers who do have jobs are hanging on to them. Economists worry the phenomenon is putting some of the country's trademark dynamism at risk. For generations, Americans have chased opportunity by moving from city to city, state to state. U.S. companies were often quicker to hire and to fire than employers in other parts of the world, but that defining mobility has stalled, leaving many people in homes that are too small and jobs they don't love or in their parents' basements looking for work. Yikes. Others are slapped with golden handcuffs. Those who bought homes when mortgage rates were low or have stable white-collar jobs are clinging to them rather than taking big leaps. This immobility has economic consequences for everyone. The frozen housing market means growing families can't upgrade, empty nesters can't downsize, and first-time buyers are all but locked out. When people can't move for a job offer or to a city with better job opportunities, they often earn less. When companies can't hire people who currently live in, say, a different state, corporate productivity and profits can suffer. Young graduates who don't land good jobs soon after college often never really recover from those years of diminished earnings, widening the gap between the economy's winners and losers. Thank you, Federal Reserve. Thank you, Congress. It's the best economy ever, right? Now, look, guys, here's the problem. We're not doing anything about this. As a matter of fact, we're doing everything we can to make this problem worse. Every time President Trump demands more rate cuts, every time some new scheme of the government subsidizing some cash-losing company or industry, this problem gets worse. If we don't fix the money, we cannot fix this problem. The exploding gap between the wealthy and the poor, it keeps getting worse. The problem is the money. You got to fix the money. And to do that, we got to stop with the rate cuts, and we got to stop with the quantitative easing and the money printing every time things get hard. And well, we're not going to do that. Nobody out there, nobody in any position to influence policy is talking about doing that. They're all talking about making it worse. And I just want to say thank you very much to Robert Feeds the Machine. Thank you, Robert, for your generosity. I appreciate you supporting the channel, sir. He says, I want at least some steel and chip production. It's clear that the invisible hand of the free market doesn't want those industries in America, and now it's getting its invisible arse kicked. Look, I agree that this is not going to happen without the heavy hand of government. And the reason it's not going to happen without the heavy hand of government, is because of the currency. Labor is too expensive in this country, and people are not willing to work for the wages that are being offered, because the wages that are being offered are artificially suppressed. We artificially suppress the wages by importing labor supply via open borders. We also suppress wages via this endless cycle of money printing followed by rate hikes, which drives up the cost of assets and the cost of living, but keeps wages artificially low. And so you cannot find people who are willing to work in this country for what's being offered. You have to offer higher prices. In other words, we cannot produce anything in this country because the only thing we really produce here, besides Ponzi schemes and accounting irregularities, is inflation. That is our chief export. It's inflation. And so, again, the government taking this heavy-handed approach, I know why they're doing it. They're doing it because we're transitioning to a wartime economy, and that sucks for a whole slew of other reasons. But I get why they're doing it. It just sucks that they have to do it. It never should have gotten this bad. Thank you, Robert, for feeding the machine this morning. Grandpa, thank you, sir, for generously supporting the channel. I appreciate that. He says, remember when all of those senators made thousands and millions on vax stonks, which they bought in January of 2020, 30 to 45 days before COVID became the pandemic? I do remember that. Are we allowed to talk about that yet? Is my channel going to get like abruptly cut off and replaced by color bars? Or am I not allowed? I don't know. Well, if my channel's gone tomorrow, this is why. Yeah, it is funny. Isn't it amazing how normal it's become that Congress people trade on inside information? Something that is illegal, all right? Right? It's not, nobody's proposing some radical change to the law that says you can't trade on non-public information. No, it's always been illegal. They've just always done it, and we're desensitized to it because corruption is now so widespread and so common that people just stopped caring. And, well, that sucks too. Thank you very much, Grandpa, for supporting the channel. Pigo's Trading Desk. What's going on, brother? He says, when you sacrifice freedom for security, you deserve neither. Thank you, Benjamin Franklin. That is a quote from him, or a somewhat mixing of a famous Franklin quote. We are entering a digital technocratic socialism creature. It's kind of scary. The return of Leather Yellen. Okay. What does Leather Yellen? Sorry, I get queued up and I get like seconds to think these out. You will all bow to me in my black leather dominatrix outfit because I am reading your text messages. I am reading your emails. I saw that picture that you sent to your old girlfriend and I have it plastered up on my wall. And you will do what I demand. Otherwise, those pictures will be made public. And I'm sure that has nothing to do with the fact that Palantir is now trading at a multiple that makes it pretty much the most expensive company in the history of the world, even though nobody really knows what Palantir even does. Well, once again, Secretary Yellen, your honesty is so appreciated on this channel. You just don't get that anywhere else, folks. Let's see if you hear that on CNBC or Bloomberg. Yeah, that's right. People giving up their freedom for security deserve neither. The digital technocratic socialism creature. You really paint a picture with your words there, Pigo. Thank you, sir, for supporting the channel. And I still owe you an email, sir. I have not forgot about that one. Just a lot on the plate at the moment. Thank you, Pigo, for supporting the channel. And Madison Hypes, thank you for being a member of the Melonheads for 10 months running. Academically, is 10% dry powder cash smart? Thank you. All right, academically. Again, Madison, let me just tell you, I don't have that permit that allows me to tell people what to do with their money. All right, so you got to keep that in perspective. I have not taken the class, signed the pledge, done whatever it takes to get that permit. I can tell you with my money, I am more than 10% dry cash powder. I'm actually closer to 20 or 30% dry cash powder. However, asterisk, that dry cash is not sitting idle in a checking account earning nothing point nothing. That is sitting in 1 month treasury bills earning about 4% interest. So that money is treading water, if you will. It's keeping up with inflation. The yield on a 1 month treasury bill, and I have a mix. I have them laddered a little bit. There's a couple of other durations mixed up in there. But the yield is supposedly higher than the stated rate of inflation. I wonder the effective rate of inflation, probably right around that 4% yield. So I am personally more than 10% allocated to cash, but that cash is earning me at least a little bit of yield. So is it smart? A lot of it depends on your age, on your personal situation. So I can't really answer that question other than to say I am more positioned in cash. But again, like while you're positioned in cash, understand you're losing spending power if you don't put that cash somewhere, a money market, a T-bill, something earning a little bit of money. Thank you very much, Madison, for supporting the channel. I appreciate that very much. And thank you, everybody, for having your coffee with the Melon Heads this morning. I appreciate that so much. Hey, don't forget that like button and that subscribe button on the way out if you're new here. Appreciate the algo love, everybody. Hi, Mom. Hi, Dad. Love you guys. Everybody, until next time, live small and dream big. Oh, and thank you for the super chats. And thank you to my Patreon supporters. Talking to you guys at 2 p.m. today, Eastern time, our weekly get together on Zoom. I forgot all that stuff. I signed off too quickly. Sometimes I get ahead of myself, guys. Anyways, till next time, live small and dream big.